Walser back on Morning Trade Live. Let's dive into financials. The sector has turned into another strong performance in 2025, with the XLF gaining 13% this year and more than 65% over the last 3 years. JP Morgan, Bank of America, Wells Fargo and Goldman Sachs have all hit new all-time highs here in December. There's a look at the chart. We are on the way up. So let's go inside out on the financials and look ahead to what's in store for next year. Joining us now is Rebecca Walser, President, Walser Wealth Management. Thanks so much for joining us today, Rebecca. Happy Friday to you. So
Thank you.
The strength we've seen in financials, can it last in 2026?
I think, Sam, it could last. The lower rates go, the more mortgage activity happens. Obviously, that helps the large banks, but also helps all the regional banks as people go to their local bank to get a mortgage in their backyard. So, I think as long as rate policy stays accommodative and the Fed is accommodative as far as, expanding M2 money supply and those kinds of things, then yeah, I think the financials will have a great year. I definitely want to caution the big banks to be like Visa and really start to look at the decentralized finance that's coming, stable coins, tokenization, because these are probably some of our last best years where the banks start to really get disrupted by alternative payment streams. So that's really something that we're looking at for headwinds longer term, maybe Q3, Q4, 2026.
Okay, interesting. What about lower rates coming down?
Well, that's it, Sam. That's so stimulating. It's so accommodative. That obviously increases mortgage refinance business. It increases purchase business. And then there's all the ancillaries that come with home ownership. Now we've got to go to Home Depot and get the mulch and the plants. And we've got to go to the furniture store and get the new couch because the new house doesn't look good with the old couch that was at the apartment that we got beer all over. These kinds of things are all related to rates and interest rates and mortgages. So, and also, obviously it doesn't encourage as much of savings in money markets, but that's okay. We still have trillions of dollars in money markets on the sidelines, and we will see, a rotation back into equities. So that will also help equities next year as well.
Yeah, obviously the big story for the banks has been, deregulation, like M&A activity that we've seen, obviously around the steepening yield curve as well, all looking favourable for the sector. But I'm just wondering, you mentioned some of the big banks. I'm just wondering how you're looking at those versus, say, the smaller sort of regional banks as well.
Well, the regionals are a lot more affected, unfortunately, by the commercial real estate, and that is still a massive problem, Sam. And it really has nothing to do necessarily with interest rates, although interest rates are a much complicating factor because a lot of these commercial loans were issued prior to 2020 and are resetting now with higher rates than when they were issued. And so that's a really big problem because not only do you have a reset to a higher rate for a refinance, but you also have a diminution in the actual real estate value itself because office buildings aren't being leveraged like they were. There's massive projects underway to take office infrastructure across the country and move it to, actual residential housing and repositioning those things into apartments and condominiums, which is great. But the regional banks will certainly be impacted by the continuing devaluation of commercial real estate. So that is a little bit of a concern for our regional banks. The big banks, I think, are a lot more better positioned to endure whatever year we have in 2026, but they would be very wise to really spend a lot of time. JP Morgan just named Visa as one of their payment processor of choice because they are focusing so much on the blockchain, stable coins, and tokenization. And I really think that all banks need to do the same. If they're going to remain valid and active into the future, we're talking 20 years down the road here, 15 years down the road, 10 years down the road, they really need to start investing now to make sure that they can, operate in a new decentralized finance that does leverage stable coins and tokenization. So I think it's a great opportunity for 2026 for the financials because this is going to take time, Sam. It's not next year, but it is coming. And I really do look to see what banks like Visa are making and taking those steps.
All right, noted. Thank you so much for that, Rebecca. And if I don't see you, happy holidays. Thanks for all your help over the last few months or so. Rebecca Walser, President, Walser Wealth Management. Appreciate it.